Hey everyone, Supermicro Computer Incorporated shares are trading down 15%, and I'm already getting questions from people saying, is this the right time to buy? I'm Chris Johnson from Monday Morning. I'm going to answer that question for you, as well as go through a couple of unique charts that show you what the options market is doing today, how they're responding to the news, and what it means for the future of SMCI's price. And as a bonus, I'm going to share a company with you that's also in the same space that's trading much higher today. I'll give you a hint. It just got included in the S&P 500 beginning on Monday. It's a great alternative to Supermicro Computer Incorporated. I'll also go through both of their charts and targets. Stick with me for 5 or 10 minutes. You'll be a better investor afterwards. Let's jump into it. All right, I want to get right into the chart and where I see Supermicro Computer Incorporated going over the next, let's call it 4 to 6 weeks or so, as well as the alternative to Supermicro Computer in your portfolio. Real quickly, though, I'm going to pop this up here. Little QR code, you can scan that. What you'll get, and there's also a link right below in the description. What you'll get for following either of those is my 5-stock watch list. Every Monday morning before 8 o'clock, I send it out. It's got a technology, a growth, a dividend yielder, and a stock under $10, as well as one that is a good shorting candidate, kind of like Supermicro Computer Incorporated is. Again, hit the link down below or scan that QR code and we'll get it to you Monday morning before 8. Now let's jump into the stock price and what's going on with Supermicro Computer Incorporated. I don't like to put up these long charts, but I needed to show you the long view of SMCI because it matters a lot. At the beginning of the year, I was a bull on SMCI. A lot of people were. I thought it was going to outpace NVIDIA. That's obviously not the case. What has happened between now and then? Well, we've had some fundamental questions as the earnings and the guidance from the company did not look good the last couple of quarters, and that caused a breakdown in the stock. One trend line that I always watch, if you give me one thing to watch on a stock, take away earnings, take away all the ratios and everything. If I had one indicator to watch, it would be this, and that is the 50-day moving average. That green line, that represents whether the stock has a friendly trend or an enemy in its trend. And you can see at the beginning of the year, it was a very friendly trend. The trend was friendly for Supermicro Computer Incorporated until April, and that's when you started to see it roll over. And now we've got it in a full-on bearish mode. Whenever it's declining like that, it's an indication that the stock is going to be lower 4 to 6 weeks from now, just as a general rule. Another neat rule, doesn't matter what stock it is, whether it's the S&P 500 index or the cubes or any of the stocks within them, whenever it's trending in one direction, either higher or lower, there's a 2/3 chance that the daily closes are going to be either higher or lower based on the trend. It's a cool little nerd stat for you guys. But notice what we saw when we started to trend lower is that you've got the sellers now coming in and taking control of Supermicro. Here is where the first sign of fire happened. And what happened right there? That is a report that came out from Hindenburg Research. It was August 27th, and they suggested that there was some accounting malfeasance going on with Supermicro Computer Incorporated. They pointed out the history back in 2018 when the company failed to file or was delayed in filing some of their financials and was delisted from the NASDAQ for a short period of time. That was followed in a couple years later with fines for Supermicro Computer Incorporated from the SEC. Now, when you fast forward to today and you ask that question, well, why is the stock down today? Well, it all comes down to that smoke that Hindenburg pointed out leading to this, which is the Department of Justice now opening up an investigation on SMCI for their books. They think that something may be going on here. Now, that's where I'm going to end the fundamental story. I want to get to the charts, the price, where it's going, and all of that. You can look up a lot of headlines today on SMCI. What's most important is where the stock is going to go. Now, let's get back to that chart, and this is where it gets interesting. This is where you had your release of that Hindenburg report, and they're a short-selling outfit. A lot of short-selling outfits do exactly that. They put out reports like this because it backs their short position and they make money. Now, notice the first move here, the gut right there is your move, is that we found $400 as support. Here's another simple rule. Follow the 50-day trend and also Watch round numbers. Round numbers hold sentiment or psychological support and resistance. It works. The more numbers that are round, look at Bitcoin, $50,000 and $60,000 of Bitcoin. You'll always find resistance at those zeros. And in this case, the $400 level pays off, and it is still paying off. But there's something going on besides the technicals here. And I'm going to show you a neat chart. This is what the options traders are doing right now. This is a live chart that goes to a feed that gives me all the option volume trading for the October expiration options on SMCI. That large red bar are the puts being purchased today as the stock is hovering around 400. That is one of the reasons that we're getting support at 400. Round number support, and you have a huge amount of volume. When people sell those options, I know you might say, hey, CJ, they're put selling so they can buy the stock. Not when it's sitting at 400. That's not the way it works. In this case, this is protection. Options traders are out there. And full disclosure, I have the December 400s and the December 430 strikes on the put side of the market. I've had them for almost 3 weeks now because of the rollover that we saw in the stock. So people are out there buying their insurance or buying their hedge right now, but look at where they're also buying. And this is today. You've got the 200, the 250, and the 300. Now, I'd argue to you that, yeah, you might have some put sellers that are actually selling those puts and getting the premium in, and that's a whole different video. But what this chart does is start to identify where the options market thinks SMCI is going. Here's the other side of that. The volume turns into open interest, so contracts open at certain strikes. And this is only updated on a daily basis, so this number will look different. You've got a huge strike there at that $400 level. Now, if you recall, going back to that daily chart, look at the support that we've had at 400. That is part of the reason that the stock has not been breaking below $400. That is about to change. The pressure from the 50-day moving average, the pressure from the 20-day, that red line, are going to kick in. And there's also another key in this chart. If I zoom in and show you just a little bit closer how we start to look at this pink thing that I've not told you about, and that is the Bollinger Bands. You've got a top and your bottom. SMCI's Bollinger Bands have now retracted to one of the smaller readings within the last year. That is almost always a sign that you're ready to have what I refer to as a volatility storm. When the stock breaks below that band on a closing basis, that's when more people are going to come in and start selling, and that causes an increase in volatility. And in this case, it would be selling volatility, taking the stock lower. So when we go back to that open interest configuration chart, that means we blow through that $400 level, which has been acting as support, and we're going to immediately start looking at $350. That's your first target for SMCI after we break down below. Call it 395 or so on a closing basis. If you look at today's activity, breaking below something doesn't happen unless it's one. I like to look for two closes, and that $400 level is certainly coming in and playing as support for the stock. But both of those trend lines are going to continue to pressure it. That open interest breaks. And there's all kinds of mechanics that go into this, but at the same time, there are things that I think are equally or more important, and that is what the analysts are going to be doing. We've actually seen analysts come out in the last 2 weeks or 3 weeks or so and defend SMCI. You've got an equal number of buys and holds basically in the stock, and the sells are very low. 44% of the analyst community have buys and about 50% have holds right now. I'm going to expect to see more analysts coming out as we go through this week and next, starting to downgrade their view of the company. The other thing that's going to be downgraded are the target prices. Right now, the current target price, $750 for SMCI. I was one that before the stock split was saying, hey, this thing is going to rocket up to $1,500. In this case, those target prices are going to start coming down on the stock. And anytime Wall Street analysts come out and say, we're lowering our target or we're taking it from a buy to a hold, it draws a reaction from retail investors that would be selling. That's what I see in the future right now when I look at SMCI shares. $400, this is a summary for you, is the key psychological level. Watch that over the next 10 trading days. We break through that, and this is going to be a quick trip down to 350. Remember, the stock made a dead cat bounce. I don't mean to offend any cat lovers out there, at the $400 level price. Once we break through that, you'll see not only the psychological level being broken, but also a little bit of that opening up the gateway and more sellers start to add into the mix. Now, shares were oversold. When we look at the chart that I showed you before, those shares were oversold when we hit that initial pace at $400. And you can see the RSI down here. And for those of you that might want to ask, it's a 21-day because this is more of a longer looking view on the stock. But we are not at oversold readings, and I always follow a rule, especially when things like this happen. Oversold can become more oversold. So don't count on that dead cat bounce. You're also seeing, as I said, the put options down at that 350 level and even lower at 300 kicking in, telling us that the options market is bracing for impact here. So what's that all come down to? Right here at the bottom, look for support at $350 on SMCI and down at the 300 after we get broken through that $400 level. It's going to be a little bit of an ugly ride. You might be looking for something, if you're jettisoning SMCI from your portfolio, an alternative. Well, there's one stock out there that I've been writing about and a lot of research on here lately, and that is Dell Technologies. Dell Technologies just got included in the S&P 500 and the rebalance. It was effective on Monday. Today, you can see the stock is trading up 5%. Really on no headlines here. It's because everyone else is starting to look at this as an alternative to SMCI. They were both seen as somewhat competitors, even though they have different products in the AI hardware space, still going head to head. And obviously, Hewlett-Packard right in there with the two, with Dell and SMCI. But right now, there's an interesting chart going on with Dell computers, and that comes down to all those technical trend lines I was just talking about. Remember that 50-day moving average? Bearish on Dell since we saw early July or so. Now we're seeing the first signs of that shifting into a bullish mode. That means you switch from a declining, higher percentage of declines every day to a stock that's going to rally. Notice also it's breaking above that Bollinger Band I talked about. Volatility now to the upside. We're not trading this for a day trade or even a week trade or so. This is a stock that I've got in my portfolio for the long haul. Also, look at those other indicators. There's that 200-day moving average. That is the other one that is key to Wall Street and algorithm traders, technical traders. You've got your 200-day and your 50-day getting ready to form a little touch and go. And eventually, when that 50-day crosses up, it's technically a golden cross, which tells you 4 to 6 months from now, you expect the stock to be higher. So there's your alternative to SMCI. Dell, I'd put Hewlett-Packard right there as a close second behind them. That is it for us. As for Supermicro Computer Incorporated, make sure, as I said, let the dust clear. I put them in the penalty box, SMCI right now. I expect to see that 350, 300 or so, and even at that point, not sure if it's yet a buy, but it starts to look like a value based on what happens with the Department of Justice and this investigation into the books. It is going to be a long and drawn-out process. For that reason, I have to remain bearish on SMCI, and I was a staunch bull at the beginning of the year. And I look at Dell Technologies as my alternative, DELL. Look for that stock. It's trading right around $127 or so. I look for this stock to make its way up above $150 and target a $200 price over the next year, maybe even 18 months or so. It is going to be an aggressive move higher. Once again, I'll remind you, hit the QR code that is right here, should be there, and hit the link that is in the description. Get that 5-stock watch list every Monday morning before 8 o'clock. And don't be afraid to ask me about a stock you'd like for me to cover down in the comments. Make sure you like and subscribe us. We're here often talking about these movers and shakers in terms of the stock market. Till next time, I'm Chris Johnson, wishing you the best trading success. Have a great day.